Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com, with you on a Tuesday. This is first day of August, 2023. Let's get right into it. I have a class coming up tomorrow about levels and process. If you are interested, hit the link below. I still have some room for some people. It is a free class, so no risk to anybody except you possibly get something out of it. Okay, all right, so let's get right into it. Not a lot really that we didn't go over last week. In fact, we're sitting right in a range. Let's get right to the charts, go from there and share my screen here and go into the charts very quickly here. All right, so looking at the S&P, very simple. We've got a narrow trading range starting from last Friday, still pretty much contained within the boundaries of last week. We got 45.90 to 46.20 in the S&P. We got another support area down here at 45.59. The high distribution, which we talked about last week, really doesn't come in until about 46.55. And that pretty much sums it up. So not a lot, pretty dull, pretty lackluster trading summer. Whether that changes, obviously, who knows? You know, rates did jump up to get into that. NASDAQ similarly in a fairly tight range. We just had AMD. We got Apple earnings coming out after the close on Thursday. Maybe that changes the situation here, but generally speaking, again, pretty dull market, just kind of range trading. We got major support, 1552. I think we mentioned last week we did a short here, got out right literally down here, runs back up, now been sideways. Don't have any levels until you get up to all-time highs or the lows down here. So not a lot going on there. Looks like the Dow is going to get up to all-time highs. So that's that right there. That one's pretty much almost like a self-fulfilling prophecy. I mean, we don't have really much left other than, you know, maybe this guy right here at 36.28. Pretty much looks like we're probably going to make a new high in the Dow before anything else. Russell kind of just stuck. 2017 resistance, also just range trading, not a lot going on. Bonds did sell off again today, and again mentioned last week about the 4% mark being a trigger. That maybe the market's going to absorb that now, but I doubt it, especially if we stay up here. So you know, we've kind of been drifting lower, still haven't made a new low in the 10-year, the year price. The yield did jump up to the prior highs. Still, by the way, has not taken out the July 5th high in the yield, which is right here at 403 and change. This is the yield right here. So we still have about a little bit to go. Looks like we backed off a little bit and sitting right at 4%. So it's going to be interesting with the non-farm payrolls coming out and the ADP on Thursday, whether rates stay, stay up here, even go higher or come down. I think this is really going to be important for the stock market. If we stay up here and then rally up into that and make a new high, that's going to be a tailwind for, or a headwind, I should say, for stocks. Dollar also continuing to, did rally, came right off of that level right there. So it looked like we were going to head up to that prior level I mentioned to y'all last Friday. Looks like we actually are coming off of that guy right there for now. So it's going to be, this is also going to be important for the stocks. If we rally back up to here after the non-farm payrolls, if it's a hot number, we should be able to, that's also going to probably have an impact on stocks. So, but for now, we're just pulling back, still continue to move higher, and maybe we pull back. It'd be interesting to see pull back into this area and then rally again. I do suspect we're going to go higher in the dollar. The only currencies, we have a few trades set up here. I think I mentioned on the pound. So we have one trade, which, is still kind of in the works right now in the British pound down around the 2708 area. We also have, looking at the Mexican peso, up at the 60 area. These are the kind of trades I'm looking at right now. And then the yen I've been talking about with the change in policy, whether it holds this level or it goes lower, looks like it's probably going to blow through that and go to the lower level down in here on the yen. If by the way, they break to a new low, they're probably going to intervene, the Bank of Japan. So, and then Swissy may have a reversion trade back down to this 1.1341 where it broke out from. That would be a pretty good area to buy the Swissy. Australia left interest rates alone. That also pressured the Aussie. We don't have anything on the Aussie until we get down to 67.22. And everything else really, Canadian been chopping around here, very, very choppy. New Zealand also, so not a lot going on there. Similar with the metals, even gold looked like it was going to head higher. You can see now back to below 2,000 and not a lot going on there. Copper looked like it was going to break out. This is why breakout trades are a little bit tricky. Seems to be like a false breakout, kind of watching. We're actually looking to buy COPEX as a proxy. If you guys don't know what COPEX is, I'll put it up here. This is an ETF proxy for copper. So you can see it's a copper global X copper ETF. If you haven't traded that before, this may be something of interest. Looks like we're ready to break out on that. Since we're on this, and I'm going to bring in oil. Oil, as I mentioned in the weekend newsletter, looks like it wants to break above 83. The question becomes, how far does it break? How hard does it break? And the next question is, this is inflationary. So is this also going to be a problem for rates, inflation, and the Fed if we start seeing oil back into the mid 90s and gasoline prices coming back up again? This is one of the major inflation components, obviously, that everybody pays attention to. So it's going to be interesting. On a trading level, we got to have a pull back down to about 79, and or if it breaks out, get a mean reversion type trade as well there. Rest of the markets really, nat gas just stuck in the mud in a range 250, 280, nothing really to comment there. And then the grains, after these big swings last week, just making it round trip. You see wheat didn't quite, wheat actually came down to came up to here, round trip back and forth. We'd had these big swings in wheat. Now, if it breaks down below that, you're probably heading back down to 550 on wheat in the continuous contract. So this is the continuous contract. Looks like we're heading to 550 or below. That goes all the way back to here on the continuous chart of wheat. And then the rest, soybeans also been very volatile. That's still got some levels below here. Basically just came up into the resistance and fell off. And then corn is seeming the more subdued one, which is basically just right back down to the 5 bushel. So lots of movement in the grain markets, but you got to be careful not to get caught up in these middle parts of these moves, which I'm going to be discussing in the class coming up here. So that pretty much sums it up, everybody. We're going into the worst seasonal period in the stock market, August, September, going into October. Whether that pans out this year, in May, you've got, the market's already rallied pretty hard. Sentiment is getting pretty extreme. VIX is still sitting at 13, could sit there for a while. As long as it doesn't break to a new low or breaks above 15, market just churn and burn here. Again, VIX at 13 or 12 is not in itself in and of itself a sell signal. How that goes, but generally speaking, you got to be careful. I know it's been a challenge. A lot of these markets have been just chopping around, especially the indexes. Really been rough to trade on the indexes. But again, there's a bunch of stocks that are moving. If you're not, if you're not in tune with options, like you look at Roku last week. I do expect another big mover this week. Probably Etsy would be the one that has a monstrous move like Roku did last week. So that'll be interesting to see how that we're probably going to play that as well. Like Roku had that big move last week. Okay. All right, everybody. Again, if you want to sign up for the class, it is tomorrow, 4 p.m. Central, 7 Eastern. It's a free class. So, and if you want to sign up for the newsletter, get in touch with me, support at Transparent Trading Solutions. All the links are below. If not, I'll see everybody on Friday. Take care.